perhaps companies that grow really fast, they forget about this. But again, if you don't have a strong internal governance control, that could potentially bite you in the end. In the end, cash is still king. So I think the combination of understanding profitability and unit economics from a P&L basis is a very holistic picture that you continually need.
Hi, I'm Elise Tan, and I'm your host for this episode of Hard Truth by Vertex podcast. Today, I'm really glad to have Gary Khoeng, our partner based in Indonesia, with us. Hi, Gary.
Hi, Elise.
So, Gary, you have been with us for quite some time. You have started the Vertex team in Indonesia. So, tell us about yourself. What's your background?
Sure, yeah. I started my career in finance in the United States. I worked in banking for several years before doing my MBA and then returning to work in management consulting in Jakarta. After working in management consulting, I decided to move into venture investing back in, I think, 2014-ish. So I've been in venture since. I was with a local Indonesian VC fund and then joined Vertex.
Yeah, and I think 2017, the startup ecosystem look very different now, right, compared to then.
Yes, of course. Yeah, a lot different.
So how has the Indonesian startup ecosystem evolved over the years?
Yeah, I think back perhaps almost between 5 to 10 years ago, the startup ecosystem is relatively more nascent than it is right now. We didn't have any unicorns. We didn't have any companies that went IPO. Those are relatively recent, development that happened in the past 2 years or so. Now, that said, I still need to note that the Indonesian startup ecosystem is still primarily early stage. So there are a lot more early stage deals that exist here and eventually graduate into later stage. Now, how has that changed? Obviously, with the recent changes in microeconomic situation, as well as the recent cool down of investor confidence here in Indonesia. I think valuation inflation has cooled down a little bit. Back in 2021, there are a lot of so-called FOMO. So there's a lot of interest from investors, not just locally, but also internationally.
Yeah, definitely a lot of change since you joined. And I'm just curious, how did you get to know Vertex?
Yeah, so when I was with the local Indonesian venture capital fund, we did a co-investment in one portfolio with Vertex Ventures. So I think at the time we already know each other. At some point, Vertex reached out to me with regards to potentially leading the Indonesian team here and creating one per se. So that's how I joined Vertex. Yeah.
And what was your first deal in Vertex?
Actually, my first deal was a deal that came out of Y Combinator. It's a company called PayFast at the time. And this was like around, exactly 2016, 2017. So there's this one company that we thought was quite interesting to invest in because precisely they were in financial services and using the agency model. That company was PayFast, so we invested in them.
Got it. And in terms of, I guess, industries that are growing well in Indonesia, Fintech is definitely one of them. How have Fintech grown over the years? Yeah, and do you see any other sectors that would do well in Indonesia ecosystem?
Yeah, Fintech has always been a broad category of investment here in Indonesia. We need to note that banking penetration in Indonesia 2 years ago was only about 30% or so, and it's probably increased a little bit, but still it's on the low side. So anything from loans for payment processing, for banking services, for payment transaction, right? So there's always going to be a big opportunity because there's the financial services bucket, and then there's subcategories within it, and this could include things that I mentioned before, as well as types of products. So it could be service provider, it could be software as a service, it could be a mobile application product that a startup comes up with. Now, you asked what other sectors could be interesting in Indonesia. I think Indonesia has to play on its strength, right? So, for example, Indonesia has a lot of population count. It has grown quite significantly in the past decade or so. So obviously the lowest hanging fruit would be anything consumer related. A derivative of consumer related product would be consumer financing, right? But other things directly would be retailing. Hence, we've seen a lot more of the companies that graduated to become unicorns and eventually IPO really revolve around the consumers. Now, there are other challenges, or I guess, challenges of the country of Indonesia. For example, we are an archipelago. So by nature, we are a chain of islands. So infrastructure is a challenge. So one example of infrastructure would be logistics and transportation. Hence, there has been companies that try to tackle this, whether it be first mile, mid mile, or last mile companies, and have done relatively quite well. So things that play into Indonesia's inherent challenges and strengths would be compelling investment thesis.
Yeah, thanks for bringing us through that. So we have, in fact, made quite a few investment in fintech, consumer, as well as logistics. We just share some of these portfolios in the sector and what they do.
Sure. Yeah. I think in Vertex as a fund, we invested in companies like Validus, Fairbank. So these are lenders, right? They make money off interest. So again, these are the things that I mentioned before. Now I think Fairbank plays into its focus in supply chain financing, primarily in distributors, outlets, financing, using term of payment lending, essentially. Other things, consumer, for example, Daily Co. is a company that we invested. To be fair, the company has since embraced a lot more of the offline footprint, but we invested in them during the pandemic, and even during the pandemic, when a lot of people order food online, companies like Daily Co. and several of its competitors actually benefited quite a lot, and that was one of the investment theses that we made back then.
Yeah, and I think in terms of progress, Daily Co. definitely have made significant progress. I heard that they managed to expand into not just throughout tier 1, but tier 2 segments as well.
I'd like to add that it's not just about direct consumption as well, but it could be, services that companies provide and create to support such behavior. So another company that I would like to highlight is a company like Circlo that we invested, and they essentially enable these online transactions and primarily commerce, right? So they don't actually produce a product and sell it in the way Daily Co does. They don't create a brand, but they serve, like Circlo serve brands that would like to utilize online channels and sell. So, that plays into, again, the consumption behavior and the large, value of consumption here in Indonesia.
That makes sense. So I also want to dive a bit deeper into the Indonesia ecosystem. What do you think are some of the notable trends recently? And what are you personally excited about?
Yeah, sure. I think, we made an interesting investment in Atmos recently, in the past year or so. And that company primarily tries to solve the climate situation here in Indonesia. Obviously, as developing country and as part of the global citizen, climate is a very important responsibility that we look at. And companies that try to solve them are of interest to us. So Atmos is still very small. I think I would consider it more of a pre-A or even a post-seed investment. So I would foresee a little bit more companies that try to tackle that. I have seen several companies that try to tackle on the waste side, like waste sustainability, perhaps food for farm animals or fisheries and all that stuff. Like as I mentioned, I think there are still a lot of opportunities in the I guess existing buckets that we've talked about: consumer finance, infrastructure, education, health, and whatnot. That still has good investment theses under them, right? So we are even as we speak right now, we have a live deal that looks into software as a service, but within the financial CFO stack sector.
Yeah, that's very true too. I'm really excited because Southeast Asia, maybe in terms of land mass or in terms of percentage of the world, our land is really 1 to 3%. But there's so much carbon sinks, in terms of concentration within Southeast Asia and particularly in Indonesia. So what FAMR is going to do, I believe, it will really create a lot of change in the voluntary carbon markets.
Yes.
Yeah, and I think FAMS is one of the earlier stage deals that we have done. So primarily, Vertex, we invest at slightly before Series A, Series A, and even B. So what do you think is the investment thesis? Could you share for Indonesian market in particular?
Yeah. Now, in Indonesia by itself, as I mentioned, although the startup ecosystem has existed for almost a decade, that still primarily the majority of the companies and startups founders who are trying to tackle different problems and provide different solutions are still in the early stage side. So we as a fund may have a sweet spot within the Series A and potentially pre-B or post-A, but in Indonesia in particular, we're also very open to look into pre-A deals or potentially post-seed deals. So that is still definitely within our mandate, precisely because there are.
And let me ask you a basic question, which is, if an entrepreneur is interested to reach out to us, what do they need to do, and what do they need to prepare for their first meeting?
Sure thing. Yeah. So I think founders of startups can reach out through multiple channels. Of course, the easiest one is to go to our website and reach out to us. There's a link that you can click and send and submit your pitch. But I think it is still a more effective and way to actually reach out to us personally. So we participate and we always actively participate in many community or startup and technology community events. So events such as Tech in Asia, perhaps, or Deal Street Asia, or even government backed ones like Hub ID or Nexticorn. Those are the usual places where investors would be happy to participate and look into, because there are a lot of startups that are being congregated in one place. So and that's a very good way to meet somebody in person. Now, of course, venture investing is it's considered private market. So I think utilizing network, if you're a founder, if you have friends with other founders, you can reach out, perhaps a particular company or startup.
And then when they meet you for the first time, how prepared should they be?
Yes, of course. I think a pitch deck, which is essentially a presentation in the form of a PowerPoint or a PDF that helps you explain and articulate what your company is about, the problems that you're trying to solve, the products that you're trying to develop, as well as why do you need to raise such funds to fuel your growth, right? I worked in management consulting before, and when we interact with clients, we always have a presentation to help us communicate and articulate certain ideas. It's just that because sometimes you may say A and you mean you want to say A, but it can be misinterpreted to be B, and it goes both ways, by the way. So it's just shooting yourself in the foot is what I would say. So I think you need to be prepared to bring some materials to help explain and get the investor to understand what you're trying to do, because once they understand and they agree and they like what you're doing, there's a higher likelihood of them and investors, including us, to invest in your company.
Yeah, I think that's very helpful. But but we are really quite casual. We are not going to penalize you just because perhaps your deck was not well designed. Yeah, so just reach out to us for a chat anytime.
Yes.
Yeah. So thanks for sharing us about how we can reach out. And you have been the first person to start our Indonesia team. How big is the team right now?
Right now we have around 5 people. It's still small. Obviously, our headquarters, the main investment team, sits in Singapore. We do have a team in India as well. So Indonesia team primarily covers just Indonesia.
Yeah, and I think as a VC, we are quite unique in Indonesia ecosystem. So we pride ourselves, generally as a partner to our co-founders, to our investees. So, Gary, share with us, how do we usually support our portfolio?
Yeah. So I think if you would like to get kind of like first-hand experience or feedback, because you more than feel free to actually reach out to our portfolio companies and ask for their feedback. I think a lot of green founders or first-time founders typically just randomly reach out to all venture capital funds. But my advice would be reach out to startups that have been invested by multiple venture capital funds and ask for their feedback, how these funds interact with them as founders, right? Because that's quite important. Perhaps some investors are very inactive, some are overly micromanaging, and maybe there's some that are in a good mix in between. We are more than happy, and we do like to help our companies who have such aspirations, meaning like they would like to go to a different country within the region, expand, and perhaps collaborate with other portfolios that exist in the different regions. So we help out anything from advice on their business operation. We help on business development. We have actually a team in Singapore and Japan that helps finding clients through our networks of limited partners for our companies and portfolios. So that has happened to some of the portfolios that we had, especially who exports to some of these other countries. We also, provide. We have interactions with service providers, for example, like headhunters, for example, like legal advisors. So these are our service providers that we can introduce to the startups, and they usually use them themselves.
And just to add, as Gary stressed early on, we are in the Southeast Asia India Fund. Vertex is actually a network of 6 funds around the world. So we are present in US, Israel, China. We also have a growth fund that invests from Series C, D onwards.
Now, it is quite rare for an Indonesian startup to have reached that stage because, as I mentioned, a lot of them are still early. But we have seen cross-country interactions that happen in our China fund or in our Israeli fund or even in our India and our US fund. So, for you out there who have such aspiration, that is something that we can bring that perhaps not many other funds could. Yes. And as you correctly mentioned as well, we do have other types of not just geography coverage funds, but also like a growth fund, right? And our growth fund, VGF, they primarily focus on Vertex portfolios. So if you have become part of the Vertex family of portfolios, then access to the VGF fund is something that you have better than other people out there. Yeah.
Thank you for sharing. Yeah, so Gary, you have given us quite a bit about what we do in Indonesia, and I now want to tap into your 6 years of experience working in Vertex, and actually even longer as a VC, someone working in VC. What are some of the hard truths that you learn along the way? That you would like to share with maybe early stage entrepreneurs?
Sure. Obviously, there are many learnings that first-time entrepreneurs or somebody who would like to learn, especially things that happen in the recent 1 to 2 years, precisely because all the things that has happened. Rising interest rates, the Russian war, the SVB fiasco, and all that stuff. But I think if I'm to choose one, and I would like to highlight one, would be this mindset of, for lack of a better word, bottom line profitability. Now, that has become more rhetoric nowadays, but back 8 years ago, nobody cared about that. Perhaps money was cheap back then, so it's okay. You don't need to focus too much on profitability. You grow to a size where you can beat that, right? But nowadays it's very different. Money is not cheap anymore, and the interest rate environment is a very different environment than what it was before. So yes, unit economics is and profitability is very important for you to focus on. And again, I would like to highlight that people, especially the more inexperienced investors, would parrot the word profitability and unit economics from a P&L perspective. But you got to be careful, and you got to be aware that as a company, it's not just all about P&L. You got your balance sheet and your cash flow statement, right? So a lot of the time, some of these companies and startups, they grow fast. Oh yeah, I'm like unit economics positive. I'm profit contribution margin positive right now. But then they're building up such a large accounts receivable books that they don't get paid like 3 to 6 months later. And that is not good. Like, sure, you're growing, but you're also accumulating a lot of backlog, debt to other people who's not paying you. So on a cash flow basis, you're suffering, and you have to continually fundraise. And now that money is not that cheap, you may have a hard time raising those cash, and then at some point you will run out of cash, and the company stops operating. In the end, cash is still king. It doesn't change. The old adage in finance. So I think the combination of understanding profitability and unit economics from a P&L basis, but supported by your understanding on the balance sheet and cash flow statement side, is a very holistic picture that you continually need to watch out for.
Yeah, I think really profitability, sustainability, cannot be stressed upon more in current landscape, current climate. Yeah, but I think as with early stage entrepreneurs, I have a question in terms of, when they first start business, surely they will not make money, right? They will be burning money. So at what point, do you think that they should start to aim to become profitable? Is it 12 months into the venture? Is it 18 months? Do you have any advice on that?
Yeah, sure. So I think this question comes back to unit economics. So this is why the way we as Inventure categorize the P&L accounting slightly different from GAAP accounting of traditional businesses, precisely because of your question. Like, the idea is a chicken and the egg. Like, how can I grow without investing some capital? But then in order to invest some capital, that means I'm growing, but I'm losing money. That is precisely the point of unit economics. So whatever it is that you do, regardless of whether you're losing money or not when you first start, on a variable basis, you need to be profitable. For example, what does that mean? If you sell $100 worth of widgets, minus your variable costs. Variable costs are costs that contribute to the sale of that widget, right? Whether it be packing, logistics, etc. Right? $100 minus those costs needs to be positive. However low it is, it needs to be positive. Under this line are your fixed costs. This is your headquarters, your office costs, utilities, etc. And then you're losing money. So to your question, Elise, before, is it okay to lose money here? Yes, it is okay. But you need to prove that here, net of your variable costs, you are making money. Why does that matter? Because that means for every transaction that you do, that you sell, whether it be service or product, for every $100 or every dollar that you sell, you're actually making money. So eventually, all you need to do is instead of selling one product, you sell 10,000 products, and then you can cover your fixed costs, and then you become profitable. Now, if on the variable basis you're already losing money, then it doesn't matter. For every dollar you sell, you're losing money. It's like it's like you're doing charity essentially, right? If you're doing charity, you're never going to make any bottom line. So going back to your question, when is it okay and when is it not okay? In the end, if you can show on a variable basis that you're okay, meaning like you're profitable, we as investors can understand your rationale of doing that. So for example, you say, okay, because I'm only doing 100 transactions right now, but I have a plan to increase it to 10,000 transaction, and that would cover my fixed costs and I will be profitable overall. The other potential scenario would be, oh, I'm losing money right now on a bottom line net loss level because I spend a lot on marketing, and I'm only going to spend marketing for the next 6 months. After that, I don't need to anymore. Right? That makes sense. And that's okay if every transaction that you sell, you're making money. Right? But if you stop spending marketing and then you're still losing, basically for every dollar you're selling, you're losing like 10 cents. If you multiply that by 10,000, that means you're losing like $1,000, right? For all that transaction. So that is the mindset that the founders need to have out there. It's not about when or what size. It's about when you look underneath the layers, you will understand which part of your growth of that company, being a start and a growth stage and later stage, you are at, and therefore adjust accordingly. Whether you want to tweak a little bit on your marketing side, you want to optimize on your fixed costs, you want to improve on your revenue and volume up here, doesn't matter.
Thanks, Gary. I think what you say is simple, but yet so impactful. So, Gary, we have covered quite a bit, and I'm sure maybe there are certain things, hard truths that you want to share as well, which I didn't manage to ask you. Do you want to, just share?
Yeah. Oh, okay. So maybe here's another learning. As a founder, especially first-time founders, or you've only had several years worth of experience, and then you want to start a company, and then for whatever reason you get lucky, or you're damn good in what you're doing, you're able to grow exponentially, like grow so fast in a short period of time, right? Now, managing personnel is not easy, but it is a skill that you need to have, because as a founder, you are responsible for all of the happening. As a CEO, as a COO, whatever, as a founder, you're responsible for your company, right? And if you are unable to, manage your personnel, being in Indonesia, knowing that we are in a developing country, there will always be avenues of mismanagement or unfair play. I mean, that's the euphemism of fraud, right? So sometimes it could be your C level, it could be your VP level, whatever it is. as a company, you need to have strong governance control. Now, as investors, we only see the level of you as the founders and perhaps some of your key personnel. But as you grow fast, usually you would start hiring individuals left and right to cover certain areas that are popping up exponentially, right? But again, if you don't have a strong internal governance control, that could potentially bite you in the end, because if they mismanage funds, they misappropriate funds from your company, the ones who are being affected negatively is you. So I feel like, sometimes during the good old days, and perhaps companies that grow really fast, they forget about this. They have other things to worry about. Oh, I need to reach this kind of revenue milestones. I need to maintain my unit economics. I gotta be profitable, etc. Whatever Gary said before. And I totally don't bother with my human resource and my internal governance. But I feel like this is something so insidious because you don't see it until it's too late. And when you're worrying about optimizing your business, when you're worrying about making sure people pay you back from your accounts receivable, but then perhaps your accounts receivable business that you've done with some of these clients have actually been tampered with by some of your personnel, right? And then suddenly a house of cards just fall down. And that's very dangerous, because once that happens, you lose confidence with your investors. And that becomes a very unhealthy environment between investors and founders. So I feel like this is something that perhaps it's not, you cannot see it. You cannot see it with numbers. You cannot prove it. You cannot see it. Yet I've seen the impact that it can have to bring down large companies in a matter of months, precisely because of this. So I think, that is something that people don't really talk about nowadays, but I feel like it's quite important aspect to note, precisely because of the environment or the economic and investment environment that we are in right now.
So Gary, thanks a lot. I think we have covered a lot of interesting details. So this will come to the end of our podcast.
Sure.
Yeah. So thank you for your time again.
Yeah, more than happy to share.